Good evening, everyone. And today, happy to be brought back, a repeat appearance, I guess, for the Academy, and talk to you a little bit more about surety bonds. And then at the end of the presentation, we'll also give an update on some of the new COVID-related financing programs, kind of where they stand, and maybe a quick overview, especially on Paycheck Protection Program, because now people can apply for the second PPP loan. There's a few nuances there and twists to be aware of. But first, we're going to start off with surety bonds. So next slide, please. And you can keep going. Thanks. This is a program that I dare say a lot of people are not aware of, that it is not a heavily used program, but I think can be a really great tool, especially for small businesses who are maybe either brand new to contracting, maybe you're a young company, don't have a lot of years of experience. Maybe you've always been a subcontractor and now you want to get bonding because you want to be a prime and bid on contracts as a prime. Maybe you already have bonding, but you're looking to increase the amount of bonding available to you. Or maybe you just don't like the terms and conditions of your current bond and want to see if the SBA program or utilizing our bond guarantee can give you more favorable terms in your bond. So this program is a program where SBA is a guarantor. So we're not going to be delivering or underwriting a bond directly for you, but we are going to guarantee bonds that are written by agents. And so I'm going to talk to you just a little bit more about this today. If anybody's familiar with the SBA loan guarantee program, a lot of how this is structured is going to seem similar. But this is for the bonding program. And SBA can guarantee bid, payment, and performance bonds made under this program. So if we go to the next slide, we all know that, or if you've been trying to either get new bonding or increase your bonding, that it can be a struggle, especially when you're looking at contract bonds. So the contract bonding is a little different, obviously, than licensing and permit bonding. With the contract bond, you're usually looking at demonstrations of good character, the experience, the management skills, sufficient capital, and strong financing or strong financial presence, if you will. So establishing that is very similar in some ways to getting a loan, right? Or some other sort of financing. I always like to think of the bond program as it's a financing tool, but it's also a contracting tool. So I feel like it's a good hybrid of both, but it definitely can help you on the financial side. So for whether you're looking to qualify for your first bond or whether you're trying to get a larger bond, this is certainly a program that can help. It's for all small businesses. So there's once you're a small business, we'll talk a little bit about eligibility on another slide, but as long as you're a small business, you can qualify for this program. And so we find a lot of people are using this program because they're a newer firm. Maybe they have less than 3 years track record. Or for a lot of the reasons on the former slide, they're looking now to increase their bonding. They're looking to become a prime on contracts, and they maybe had some credit issues or some other things, and they want to use this program as a way to help overcome some of those and be successful in their bonding. So if we go to the next slide. So we assist a lot of businesses through this bonding program. And some of the businesses that come to us are startups, some are more experienced businesses. But if you want to be able to secure prime contracts in the future, the bond program can be really important, especially to help you build your bonding capacity. So with this program, SBA can guarantee between 80 and 90% of each bond. It'll be based on the demographics of the business, and the partner sureties will look to, the partner sureties will often look to the SBA bonding program when they have a client who they think is a little riskier. So very similar to the way a lender would consider using the SBA guarantee on their loans, the surety, the agent is going to perhaps look to SBA to provide a guarantee in similar fashion. So SBA is allowed to cover the cost of contracts up to $10 million if it is a federal funded project. But for the non-federal funded projects, we can go up to $6.5 million. So it does not have to be a federal funded project to receive the bond guarantee, but there's a slightly lower amount as the threshold for the non-federal projects. So the difference then between the 80% and the 90% guarantee is that to qualify for the 90% guarantee, we're going to look for businesses that are veteran-owned businesses, service-disabled veteran-owned businesses, minority businesses, businesses that are 8A certified or HubZone certified. Those can all qualify for the 90% guarantee, and pretty much every other business will qualify for the 80% guarantee. And again, these are for construction bonds only. There's no commercial bonds available on this program. So I go to the next slide. So let's talk a little bit more about this program. So how do what is part of the advantage? How does this help you as a small business? Many of you, or probably also have a line of credit, right? Or if you don't, that's okay. But if you do have a line of credit, you can leverage that line of credit to your advantage to increase your bonding amount as well. SBA will count the available balance on your line of credit as working capital that's available to your small business. So this could allow you to qualify for a greater total bond capacity. And the working capital requirement for small businesses is usually half of what the standard, surety bond rules would require. So often allows you as a small business to qualify for twice as much bonding capacity as you could, conventionally, so to speak. So this obviously can then help you secure some larger projects and help you build that bonding capacity. So again, if you have a line of credit, you can use that available balance on your line of credit as additional working capital available to your business to be counted for the purposes of the SBA guaranteed surety bond. So we are going to, on the next slide, I believe, talk about some eligibility items. Yes. So to be eligible for this program, again, size in two different capacities is important. So the size, you must be a small business, and that's small by SBA size standards. So if you're not familiar with what those are, you can go onto our website, the sba.gov, and you can find the tables of size standards and see, if you qualify. I can probably categorically say you all probably qualify. The size standards are quite generous. So you need to know your NAICS code in order to look up the size standard. And then once you do, you'll find that the size standard can either be revenue based or it can be based on number of employees. And so for a lot of the construction NAICS codes, it's number of employees. And in some cases, you can have over 1,000 employees and still be considered small. So like I said, these size standards tend to be generous. So I'm not worried that that's going to be a hurdle for anybody. The second part of eligibility is then looking at the size of the contract. So obviously we have those thresholds. If it's a federally funded project, we can go up to 10 million. If it is not a federal project, but something for Peralta Academy, for example, you can go up to $6.5 million. And then the last thing is like just the normal evaluation that you might go through, that you would probably go through with any bonding company. This is really going to look at your financial condition of the business. Then we'll take a look at financial statements. We'll also look at character. And then when we get into the forms, there's a specific form for SBA that we ask potential bond or people applying for the bond to fill out so that we can do background checks on the character. And then obviously the capacity to perform is an important element. So all of these different elements will go into the evaluation itself as well. Um, Again, the ways to apply are going to be through a bonding agent, one that's approved to work with SBA. And we'll talk a little bit more about that at the end too, but you'll find there's two different ways to apply. If we go to the next slide, we have a quick app. So this is for people looking for bonds that the size of the bond is going to be 400,000 or less. So for these smaller bonds, this is a path to obtain your bond guarantee through a much shorter process. It's definitely streamlined. You don't have to submit financials. It's quicker, it's faster, and it gets approval within a matter of hours. Under the normal bond process, which we'll talk about next, it can take 2 days or so to get the approval, but the quick app allows for a very fast approval. And there are some limitations and things, but just to know that if you're looking for a smaller bond, this might be a program, or this application option, I should say, might be advantageous to you. And it's especially great too if it's your first time doing this, applying for a bond, because it is more streamlined and a little bit more straightforward, and doesn't require nearly the amount of evaluation as a more traditional or a larger bond under the SBA program. Okay, so the next slide is going to have visuals, I think, on a more traditional application. So if you don't qualify for the quick app, you will go through the regular application process. Again, this is all going to be driven and through your bonding agent. They're typically going to ask for financial statements for the last 3 years. If you haven't been in business for 3 years, and provide for the number of years you have been in business. They would like to see, they might want an interim financial statement if you're more than like 6 months into the fiscal year. They also probably want a personal financial statement on the company owners. Usually, for SBA's programs at least, it's usually anybody who owns 20% or more of the business will be asked to maybe complete this personal financial statement. And then they may ask for a reference letter from the bank, especially if you have available lines of credit. They're going to want to hear from the bank to outline what those lines of credit are, so that we can see if we can increase your bonding capacity because of that line of credit. So if you're applying for the bond and looking for the SBA guarantee, there's also 2 additional forms that you'll be asked to complete. The Form 912 that you see on there is a statement of personal history, and this is provided for the purpose of doing like that character check. It's usually only completed once, and so unless there's any ownership changes in your company in the future, you probably won't have to complete that form again. It does ask for a criminal history disclosure, but it's pretty straightforward. It's only about a page long, so this isn't going to take you a lot of time. And again, if you have multiple owners of the business with 20% or more, they will likely ask for each of those owners to complete one of these statements. The other is the actual application form for the surety bond guarantee, and that's Form 994. This will be provided to you by the surety, so you don't have to go search for it, but you can find a copy on our website as well. But this is the form, and this is the form that you will complete every single time you're applying for a bond guarantee. So this will be more specific to the project at hand. So this one is the one that will change, obviously, but your Form 912 is typically only something you complete once. Let's see. If you need assistance with putting this package together or completing any of those forms, this is also when I'll make a plug for our resource partners as well, or they are great at helping package loans. So this is very similar in nature with a lot of the information that they're looking to collect. So if maybe you've never done this before and you're looking for some help, I would encourage you to reach out to one of our resource partners as well, whether it be the Small Business Development Center, our SCORE volunteers, or Women's Business Center, to see if they can help you, make sure your financials are assembled and make sure that any other documentation is completed. So people want to know, like, why would I use this program? How much does it cost? Well, there are some fees associated with the program. The reason to use it, though, is really because you might be in a higher risk category for any number of reasons. And it's usually a but for kind of scenario, like, but for getting this guarantee, you might not be able to get the size of bond you want, or if it's your first bond, maybe it's going to help you qualify. So without this program, you might not otherwise either obtain the bond or obtain the bond at the size that you're looking for. So this is a program that typically comes in for those people that are, good candidates, but maybe they're higher risk than what the agent would typically like to do conventionally. So bid bonds typically don't have any associated cost, but you could incur a cost when you are obtaining a performance or payment bond once you've been awarded the contract that requires those bonds. So SBA's fee, as you see, is 0.6% of the contract amount. And then that's a fee that's direct to the applicant, the small business. The bonding agents also charge a fee, and you will see that it can vary anywhere from 1.5% to 3% of the contract amount. Together with both of these fees, we typically don't ever see anything over 4%. So it's typically pretty affordable, and this is the SBA contractor fee is set amount, but the surety bond premium, it will vary typically from 1.5% to 3%. And that's the piece you want to talk to your bonding agent about. They're the one that'll set that amount. So they're the ones you would negotiate for that rate. This could vary from state to state on how they calculate this. So this is a good conversation, a good question to have with your agent to find out what they would be charging you. And then if you're looking around at different agents, this is a great point to ask the different agents so that you can compare and contrast between different agents and what they might offer you. So if we go to the next slide, we talk a little bit more about the application process. So your process will begin with identifying an SBA authorized agent. We do have a list of all of those agents on our website. And then I also have that I can share through Shonda and the Build Peralta Academy team. I do have a PDF that lists all of the agents as well. So that's a good time to look at that list to see if you already have a bonding relationship. Is your agent already on that list? Or if you're shopping around for a new bonding agent, you might want to consider one that can also offer participate in the SBA bond guarantee program. So you're going to start with this agent and you're going to submit your package to this agent. The agent's going to evaluate all of the information, and then the agent is going to submit it to an SBA partner surety that they represent for that surety's evaluation. And then once the surety agrees to the bond and your firm and requires the SBA guarantee, the agent then is going to submit that information to SBA, that whole package. So you as a borrower, you make one connection with the agent, and then the agent is going to shepherd it through the system. So you don't have to worry about making a second trip to SBA. The SBA is going to receive it from the surety, and then is going to review the actual application, and it will approve the bond guarantees. And again, this process takes 2 days or less typically. So once SBA is approved, the agent will provide you with your bond, and then you can submit your bid and get started on your projects. So I know the next slide has a list, or visual representation, I should say, of the 35 surety companies who are participating in SBA's bond guarantee program. But those are the main companies, but then between them, as you can see from the graphic, they have over 350 agents nationwide. And when I looked at the California list, there were 54 agents here in California. So finding an agent who can participate in the SBA bond guarantee program shouldn't be too difficult. And again, the list of all of those agents is available at sba.gov. Or I have a PDF document that I'm happy to share out as well to find that. So if you already have a bonding relationship with somebody with a surety and you're not sure if they participate, you can just obviously go ahead and ask them. If your surety does not participate, or if your bonding agent does not participate in the guarantee program, but they would like to, we certainly can talk about onboarding new partners into this program as well. So if you have a relationship with someone that you like and would like to maintain, but you think that the SBA guarantee can really improve your bonding capacity, then by all means, we'd be happy to have conversations with that entity to see if they want to participate in SBA's program. I think the next slide is another graphic that probably be too small. If we can go one more. Might be a little small to read, but this is also on our SBA website. So the bonding program is kind of divided the country into 3 regions, and they have different individuals that cover each of the regions. You'll see out of a Seattle office, they cover California. So if you want to take a deeper dive or have some really specific questions, you can also reach out to our surety bond experts. The ones up in Seattle will be there to help service California as well. And they're great resources. They can talk, what I'll call to the SOP, the standard operating procedure level on this program. And if you have a unique circumstance or some really tricky questions, they're also great resources. So you can always reach out to us in the district office. And then if it's beyond what we are able to assist with the program, we will definitely rope in one of our surety bond program office experts to help you with your bonding questions as well. So that's, I think, the end of that one. And I know I have some more slides. I think you guys have them on the PPP and the other programs. Yes, there we go. Okay. So COVID financial assistance available. Again, this is accurate as of today, but a lot of these programs are still evolving. So I always tell people you can always check back with our website or sign up for our district office email newsletter, because we do push out the information as soon as new programs become available or application phases open up. So if you don't want to constantly monitor SBA.gov, you can sign up for our newsletter and have that information pushed to you as well. So we have some new programs, and we have some kind of old programs that have been reauthorized and refunded as a result of the most recent legislation that was signed at the end of December. We basically are calling that one the Economic Aid Act. It has a very lengthy title otherwise. So the type of assistance we have available now, or soon to have available, kind of falls in the 2 buckets that you see divided here: debt deferment and relief bucket, and then a loans and grants bucket. Under the debt deferment and relief, I'd like to point out that anybody who has a disaster loan, and I'm talking pre-COVID, so if you were a victim of a wildfire or one of the other natural disasters, SBA has been deferring those payments. We had been deferring them through the end of December, but now we're continuing that deferment for at least another 3 months. This is done automatically. There's nothing anybody needs to do as far as applying for that. Also, if you have an SBA guaranteed loan, so this could be through our 7A program, our 504 program, or even our microloan program, we have a debt deferment program where SBA is actually paying principal and interest payments on this debt for a period of time. So when the program was first launched under the CARES Act, SBA was able to pay 6 months of principal and interest for small businesses. Now that program is being extended, so we'll be able to pay an additional 3 months. And there are capacity for firms to be able to be enrolled in this program for new debt that they might acquire as well under SBA's, again, 7A, 504, or microloan program. So I feel like this is something that nobody was really talking about, but is a tremendous benefit for anybody who has existing SBA debt. Uh, the best way to get more information about this program and to make sure you're enrolled or to see if you're eligible to be enrolled if you weren't before is to talk to your lender, the lender who holds the loan. So let's talk a little bit more about the loans and grants. So I have much more information on PPP, so I'm going to talk about the other ones first. The Economic Injury Disaster Loan, or EIDL loan, this was the first financing program out the gate last March, and it is still open and it is still accepting new applications. So this is the working capital loan. It is for any business, any small business or nonprofit that's been affected by COVID that is looking for working capital to help them pay their ordinary business expenses. This program is only available right now for new applicants. There's no opportunity to apply for a second loan just yet. It is still open for new applicants. And the terms on this are pretty favorable for small businesses. It is a 3.75% interest rate with a 30-year term. For nonprofits, it's a 2.75% interest rate, and again with a 30-year term. This loan is actually available directly from SBA. It's the one and only instance where SBA is a direct lender anymore. So there's an online application process that you can fill out and submit directly to SBA. This will go to our disaster team for processing, and they will communicate back with you the decision. They may ask for additional information, and they will close the loan directly with you and transfer the funds directly to the account that you designate. The past summer, under the CARES Act, we also had what you may have heard, the EIDL Advance, which was up to $10,000, basically forgivable loan or equivalent of a grant. So that program ran out of funds in the summer. We have a new program that was authorized through the most recent legislation called the Targeted EIDL Grant. So it's not quite the same thing as the EIDL Advance, but it's, I'll call it a cousin. It's close, it's similar. That program has not opened yet. There is some information on our website, and there's more information too as the phasing. This program is going to be launched, if you will, in phases. And for businesses that are eligible for it, SBA is actually going to reach out directly. So if you had an EIDL Advance this summer, but you did not receive the full 10,000, SBA will message you to see if you can qualify for this targeted EIDL grant. And then the next phase is going to be businesses who applied for the EIDL Advance, but the program had run out of funding before they could be awarded one. SBA will message all of those applicants directly as well to see if they qualify for the targeted EIDL grant. This targeted means that it's looking, has different parameters on it. You can read the details about it on our website, but essentially it is businesses located in low income areas and that can demonstrate some sort of financial loss, revenue loss. The other brand new program that was created with this legislation is the Shuttered Venue Operators Grant. So this one is also not open and able to accept applications. It is still being developed, but it will be available very soon, and it will be a grant, not a loan, a grant. And it is focused on assisting those venues, promoters, whether you're a museum, it could be a zoo, it could be a movie theater, any of those small businesses that have been shuttered because of COVID-19. This program will also be launched in different phases, and those phases are up on our website. And it also has some basic information about how to calculate how much you can be eligible for under this grant. So there's a little bit there. Each week, more information is added and updated. We do not have a date certain yet for when this program will be officially open for application. But let's talk a little bit more about this iteration of the PPP, the Paycheck Protection Program. So if we go to the next slide, and again, please. And we're going to go through a couple of these. One more, please. And you know what? I'm even going to go one more. So this program was reauthorized and refunded. And the program actually opened up in phases as well. And this was different phases by different types of participating lenders. But as of today, as of now, all participating lenders are eligible to submit what we call first draw or second draw applications to SBA. So no need to worry about these timelines. The only timeline you need to focus on now is the deadline. The program is authorized through March 31st, subject to availability of funding, of course. But there's two new terms that I want to make sure people understand with this iteration of PPP. We have what we call a first draw loan and a second draw loan. And what those terms are referencing is first draw is simply just the first time you apply for a PPP loan. Now, that could have happened in 2020, or maybe now you are looking to apply for your very first PPP loan. And second draw is then just referring to the second time you apply for a PPP loan. You were successful getting your first loan, now you're applying for the second. So this application process, if you're familiar with the last iteration, it's working the same. You will need to apply through one of the participating lenders. This is a guaranteed loan program, technically speaking, although SBA is offering 100% guarantee. So you need to start with the lender. The lender will have either an online platform or accept the paper applications. And then the lender is going to process that, make the eligibility determination, and then send that information on to SBA. This time around, though, SBA is not going to automatically provide a loan authorization number to the bank. What we're going to do is do an interim, basically an identity verification check before we go on to the next stage of sending that authorization number to the lender. The authorization number is what tells the lender that they are under this program. They have, secured their funding, so to speak, out of this program. If we look at the next slide, it talks a little bit more about the first draw. So this, again, open for anybody who has not yet applied for a PPP loan. We have expanded the types of entities that are eligible. So it has largely added a lot of nonprofit entities. So we have added 501c6s as eligible entities, as well as certain types of cooperatives, electrical, housing, and telephone cooperatives. And we've also added destination marketing organizations, and those can be nonprofit or quasi-governmental. And we have added some types of broadcast news organizations. Also, the types of expenses that could be covered by PPP loan, if you want the loan forgiven, has also expanded. So we have two types of costs: payroll costs and then non-payroll costs. Payroll costs is largely the same. Any kind of payroll expense, compensation, you can include any sort of payments that you as a business owner might make on behalf of your employees towards health benefits or any other group benefits. You can also include state and local taxes on compensation. The non-payroll expenses include mortgage interest, rent, utilities, but also includes now operating expenses. So these could be things like maybe you use an accounting service to help you, or if you have a software or online subscription that you need to help operate your business or perform whatever service you might be providing. Can include those, can include supplier costs, can also include worker protection costs. So if you need to provide your employees with PPE, or if you need to, reconfigure your space or provide physical barriers in order to comply with some of the health department requirements, you can use the funds to help support that effort as well. And also, if you had sustained any property damage from any of the civil unrest uh, or disturbances that took place this past year, you can use the funds for that as well. Thing to be mindful for though is even though we've expanded the types of expenses, if you want to have the loan forgiven at the end of the day, you still have to make sure you spend at least 60% of the loan proceeds on payroll and no more than 40% on all those other expenses. The concept of a covered period, that's the period of time you have to spend the funds, still exists, but it can be anywhere from 8 to 24 weeks. And so if we go to the next slide, so this is a good visual of the types of entities that are eligible. Regardless of whether you're a for-profit or a nonprofit, you do need to comply with SBA size standards. For some of these organizations, there's very specialized size standards. The cooperatives, the destination, or the housing cooperative, I should say, and the destination marketing organization in particular, you can't have more than 300 employees. The rest you can follow SBA size standards. Also have to have been in business as of February 15th of 2020. And this program, or this loan, I should say, also carries a term of 5 years if there's a portion of it that's not forgivable at a 1% interest rate. And again, there's no collateral requirements to apply for this loan. There's no personal guarantees. SBA is actually offering a 100% guarantee in this case, but you as the borrower are not required to offer any sort of personal guarantees, nor are there any fees associated with this. So if you find someone who wants to process your PPP application and is trying to charge you, back away. You don't want to use that person because there's no fees associated with this whatsoever. Next slide, I think we start talking about the second draw PPP loans. So it is worth spending a few seconds on this because there are some differences between the first draw and the second draw when it comes to who is eligible to apply for the second draw loan. So this loan is still following most of the same PPP rules. You still need to be one of those eligible entities we just talked about. But in this case, the size standard for every business is 300 employees or less. And you also need to show a reduction in your gross receipts, at least a 25% reduction in gross receipts between 2019 and 2020. So if we go, I think the next slide actually spells this out a little bit more. So applying for the second draw PPP loan, you're going to have to demonstrate that obviously you've used all your funds from the first draw. You do not have to have gone through the forgiveness process, but you do have to make sure you used up all of those funds before they disperse any additional funds to you. And then the other item that's probably people are going to spend the most time with is this 25% reduction in gross receipts. So here's what I'm recommending most businesses do is first take a look at your 2019 and your 2020 gross receipts, like annualized. If across the board you have a 25% reduction in your receipts from between 2019 and 2020, you've met this standard, you've met this threshold, and you're good. You're good to apply. If you don't have that 25% reduction across the board, this is when we need to do a little bit more math. And what I'm recommending you do is take 2019, take your gross receipts and break it out quarter by quarter for the year, and then do the same thing with 2020. And then you compare. So quarter one in 2019 to quarter one in 2020, was there a 25% reduction? And then you keep doing that for each quarter. So as long as one of those quarters you can demonstrate that 25% reduction, you meet this criteria and you are eligible to apply. I dare say for most businesses, that'll probably be quarter two in 2020. If you're still a little unclear, or maybe you're in a situation where you weren't in business for all of 2019, or even all of 2020, well, you would have been in business for most of 2020, but um, and you're not sure how to make those comparisons for this 25% reduction requirement, there's a document on our website I'm going to refer you to. There's actually one for the first draw loan and one for the second draw loan, and they focus on how you make these calculations. So for the second draw one, it focuses on how to deduce or to calculate your 25% reduction under a lot of different scenarios. And then it also has different scenarios to walk you through how to make the calculation for how much you might be eligible for this loan. So for the second draw PPP, the other nuance to this is for most businesses, you will be eligible to apply for 2.5 times your average monthly payroll. And how you calculate that, again, those two documents I just mentioned give you really nice breakdowns and lots of different scenarios under different forms of business. Everything from self-employed through C corporations. But for the second draw PPP loan, if you are a business that has a NAICS code of 72, which because we're doing mostly construction here, probably not going to be a lot of the businesses on this call, but just to make you aware, if you are a business that begins at the NAICS of 72, so that's typically food service and accommodations, you may use the multiplier of 3.5 times your average monthly payroll to calculate the amount you're eligible for under your second draw PPP. If we go on to the next slide, you talk a little bit about forgiveness real quickly here. So obviously both loans will require you to apply for forgiveness. If you already got your first PPP loan and did not apply for forgiveness, that's okay. You can still apply for the second. You will notice that there are a few new enhancements also under the most recent legislation. So those idle advances that you may have received, we're no longer required to deduct those from the forgiveness amount. So that's the one part that usually makes everybody very happy. If you are a business who's already applied for forgiveness and you had your idle advance deducted, and maybe that's the only reason you were left with any sort of loan payment, we are going back to the lenders and we are going to reimburse them those amounts of those idle advances. So you will not end up with a loan, you will be made whole. This will take a little bit of time, so I do urge a little bit of patience with this, but SBA is automatically going through the list of businesses that we deducted the idle advances from and is systematically then reimbursing the lenders. So there's nothing that you need to do. You don't have to fill out a new form or anything like that. It is being done automatically, but it is going to take a little bit of time to get through everybody. The other thing that made crystal clear in the legislation was that the forgiven PPP loans are not a taxable event. It is not considered taxable income. And you can also deduct those expenses from your tax return as well. So it is not taxable income, and you can still go ahead and deduct the expenses you might have paid for under or with the proceeds of that loan. I believe IRS did just come out with a notice too that reinforces this because it is in the law. So they were going to adjust their policy notice, their former policy notice, to accommodate for um, this new ability. Uh, there is also a new form, a very streamlined forgiveness application form for loans of $150,000 or less. So this is now actually available on the website. It's 3508S, S as in Sam, and it is very quick. You do not have to do lots of calculations or worksheets. It really is just fill in the numbers, and then you still have to attach your supporting documents when you apply for forgiveness, but the actual forgiveness application form is very simple and straightforward. So we have the next slide. So here's kind of a quick breakdown on the forms. You will see for the first draw and the second draw, there's two unique application forms. So please, you can take a look at them on our website. A lot of lenders have automated the process, so they do have an online portal they might direct you to. It's the same information, but there is a unique one for the first draw and the second draw. And then there's also a reference to those supporting documents, those guidance documents that I think are very helpful. And then also some of the new interim final rules that provide the amendments to the program per the most recent legislation. And the next slide. So this is just, I'll leave you with the information on resources and how to get a hold of us. Again, there's programs that are available now. There's still more coming. You'll see there, you can sign up for our newsletter. You can email us. I recommend emailing over calling because our phone tree is just horrendous. It's very old and antiquated. But emailing, we are checking that constantly and responding as quickly as possible. Similarly, if you want to visit one of our resource partners, they've been really helpful in helping businesses even apply for all of the programs that we just mentioned, and some of the state of California programs like the California Relief Grant, where the second iteration of that is going to open up, I believe, February 2nd. So if you want some help breaking down all the different programs, because I know there's a lot and they come and they go and they have different eligibility requirements, but the resource partners are really great for helping you navigate all of those programs as well.